Good morning. Welcome to the Brew. I am Lex, your host. We have Mark and Jason with us today. We're going to continue our conversation about the Magic Iron Condor, SPX style, maybe a little spider talk as well. We're going to have a little peek at HV and IV and take a peek at the strategy that's so prevalent today in the zero DTs. So stay tuned for the Traders Workshop. Good morning, boys. How are you?
What's going on, Lex? How you doing?
Good morning, Lex. Good morning, Jay.
I'm getting ready to
pre-show, Lex.
Yeah, go ahead.
Pre-show, I saw that you took a call. What, on your like teenage daughter's phone?
Yeah. So this one here, it's purple. It matches Mark's sweater.
And your trading jacket.
That's my trading jacket. Exactly. So the reason I get the colorful phone case is you put that thing down. If it's a dark one, you can't find it. So I need to stand out because I'm always losing it. It does look like I should be sitting in the back of a pickup truck, doesn't it? No offense to pickup trucks because I love them. Looks like I'm going hunting today. How are you guys, man? So this Iron Condor thing, I do have some observations and I need a little help from Volland on it. Last time we talked about this, which I think was a week ago, volatility was a VIX handle was in the 20-ish, I think, somewhere thereabouts. We're down into the 14, 15 range. So clearly what's happened is those short strikes on an Iron Condor have pinched to get any value out of selling this thing, right? So I was at, I want to say 50-ish points, 55 a week or so ago, and now I'm at 30, 35. That's scary.
Well, first let's clarify. You're talking about zero DTE
That's
Iron
right.
Condors?
Yep.
And you're talking about putting them on toward the beginning of the day as opposed to toward the end?
Yep.
It's I mean, we were talking, I think, 2 weeks ago about your zero DTE Iron Condors, how implied volatility has been pretty high. Yep. So you've been getting some good range on your Iron Condors that you've been cashing in on. So how have you been doing?
Well, I've been doing well. Like I said to you guys, I had one bad one that, and quite honestly, it was my fault. I didn't have the trade plan in place, and I let it go to nearly 100% loss, which was really stupid on my part. But that's the only one that was a problem. So all the other ones have been, I would say, I don't know what the right word is. It's painless, but nothing ever was breached or pushed or made me feel uncomfortable. And it's literally a 2-3 hour trade at the most, right? The other note I'd make is don't do it on FOMC days and don't do it the day after FOMC days. There tends to be an unusual continuation, but I would also say that using Volland, Jason, it helps me figure out what kind of spread I need to do and then where I have to place. The key is placing the legs, right? So I like to have the market shake itself out for about an hour, 30 minutes to an hour. And then I'll start looking at your stuff and getting the legs all set, move them around a little bit. I'm trying to get at least 50 cents on these things, right? Mm-hmm. And I'd go through the mathematics of, the risk reward and figure out, make sure it's one plus, but I'd like 3+ on that metric. So any thoughts on this, guys? Is this crazy?
No, I mean, we could talk about.
Well, I think his volatility.
Oh, sorry, Mark. Go ahead.
I was just going to follow on with your lowering volatility comment and the premiums and the trade planning. That's one of the biggest things that kind of has to change with this strategy as we get into a lower vol environment is adjusting your trade plan overall, right? Like if you're either pulling your strikes close to the money or collecting less premium on that, you've got to adjust your stops, adjust your timing. Like all those things need to move in concert as that vol environment changes. I'm collecting 50 cents on a Condor that's $30 out of the money. Like I'm not setting my stop at 20 cents. I got to get a little bit more juice out of that.
Mm-hmm. Yeah,
I'm not looking for 100% profit. I need more.
Yeah. I agree with that. I think it even begs the question: do you turn an iron condor into an iron butterfly, or butterfly? You know, I guess it doesn't matter. Do you turn it into that at some point? Does that make sense? Because, you know, if you do in a low volatility environment, you can do these iron condor or iron butterflies for pretty good prices. They're not horrible, and your risk reward is pretty solid. Now, you're not getting 90+% probability of profit on those. It's much less, but you are getting a multiple of profit versus max loss. So, you know, I've got to think about that and play around with it a little bit, but that's another strategy I think could work in this environment as well. And my idea is never to hold this to the end of the day, right?
Yeah.
So,
I mean, although I would actually argue with a butterfly, there are reasons to hold it to the end of the day in a cash settled index. Like, you don't actually have to give up. Like, if you trade butterflies in SPY, you're giving away nickels and dimes to close those, even if you're pinning. Whereas like cash settled, just let it close. Like, let the fly settle where it lands. Like, that's the whole beauty of a fly.
Right. That's right. Yeah.
And that's the beauty of SPY. If you're close to the money and you're actually succeeding, your broker dealer probably closes that out for you.
That's right. That's the big.
You might not even get to the close.
Yeah, that's the big argument I have with SPY versus SPX. I know why folks love the SPX, and I'd love to be able to do this in XSP, which is the 1/10 index of SPX, but it's the same index, meaning it's a cash settled European style option index, which means that you can't get early assigned, not that it matters in 0 DTE. And it's cash settled, which is beautiful, but it's a $400 entity like Spider is, as opposed to a $4,000 entity like SPX. Problem there, of course, liquidity isn't nearly as good. Markets aren't nearly as tight. So that's an issue.
Yeah, but it's still tight enough that I think XSP is an excellent alternative to SPY.
Yeah, I'll mess around in that too. So Jason, any insight on the Volland curve of what dealer positions have? So Mark and I went through an education. We had our offline happy hour with you. So there's different paradigms based on what that charm graph looks like. So tell us a little bit why charm's important. You know, I know we've said it before, but let's just reiterate what that means and why it's important in this 0 DTE world.
Right. So first, charm, from a definition standpoint, charm is the effect of time on the deltas of an option. So obviously with 0 DTE, time is running out much quicker than, if it's like 30 DTE. So charm plays a big part. At the end of the day, every day, all 0 DTE options have 0 implied volatility and 0 premium. And so when charm is kind of showing the countdown much, very accurately to 0, to 0 implied volatility, 0 premium. So that's kind of why I focus why I focus on charm. Certainly Vanna and, others have an impact, but charm just, I could see it a lot better in the charm world. A little bit of background on 0 DTE. I know there's been a lot of papers out there for 0 DTE and some theses on who's trading this, if it could be a disaster for the markets, things like that. The CBOE offers something called open close data, which, from the exchange, you are learning who is on which side, in a category standpoint, not on a specific trader standpoint, who's on what side of the trade. Are market makers buying or selling? Are they long or short? Calls, puts, all that. And so we use that to try to calibrate Volland's dealer positioning. And so, it's pretty close at this point. And so we, especially on the 0 DTE, we have like 99% accuracy on 0 DTE. So Volland is very helpful on the 0 DTE scale. Another thing we find is that dealers share risk with each other. So, if one dealer is excessively short an option and another dealer is excessively long, and they look, they have each other's spreads in front of them, they will trade with each other in order to kind of level out the risk among all market makers. And what the result is a very symmetrical look, and that's what we call the paradigms. Like in my Discord and in my community, we call them the 4 paradigms, and they are named after different 0 DTE related papers that were released. So those 4 paradigms, which I'm going to do what my wife did once. She uses her hands to kind of show things.
We'll put them in front because you get blurred if they go in the fake background.
Yeah. Oh, okay. Hold on.
Take them far enough back.
Let me go look at the StreamYard because yeah. Oh man. All right.
There
so yeah. So if you're doing here, I'll spread out my arms like this. There you go. So the 4 paradigms are basically showing dealers long or short charm above and below price. Charm is one of those second order derivatives that flips when price crosses it, and that's because if you are, say, an out of the money put, say like a negative 30 delta put, and you're going toward expiration, at expiration that becomes a 0 delta put, which is an increasing number. But if it's an in the money put, like say negative 70 delta, that's going down. That's going down to negative 100 delta. So the sign on charm flips, and that's why I like to use charm as opposed to theta, because it gives you a fairly accurate look on how dealers have to hedge in order to get to their delta numbers.
Okay, so let me ask a question. Charm, then, so if you see on your graph, if you're looking at the center and you see green bars on the left, that means dealers are short puts?
If there are green bars on the left, which means below the money, then they're either short puts or they are long in the money calls. Okay.
So the reason that is because against the short put, a dealer would sell stock to be delta neutral, right?
Yes.
So as those deltas decay, that's what charm is delta decay, right? So as that 30 delta tends towards 0, it becomes 20, it becomes 10, it becomes 9, whatever.
Yeah.
Those dealers have that short stock position. They are getting shorter or longer. They're getting shorter. So maybe I had that backwards.
Yeah, we have that backwards.
They're long puts.
Yeah, they're long puts if it's green to the under the money.
So they're long puts, and now they're long puts down there, and they're long gamma. So they're going to be, as it goes down toward there, they're going to be getting shorter and shorter deltas. Puts are going to be going up in delta. So they're getting shorter, and they're going to be potentially buying stock to hedge things. Can have a pinning effect of sorts, potentially.
Yeah, I mean, so it'll get down to a point where eventually those long puts go from out of the money to in the money,
and then when they go
in the money, that's when the charm flips and becomes negative. Okay, and that's when they start pinning. Is when it's kind of like balanced.
Okay. So what I saw today on Volland for today's expiration in SPX is I saw green on both sides. Okay, pretty good green bars, and I also saw some red bars. So I was confused on that on both sides. Now I couldn't tell. They looked pretty equal in size. So what is that telling us? Where you have both.
So
and there's only one.
So right now, if you want to put Volland on the
let's have a look at Volland.
Yeah, you could put Volland on the screen.
Mark, Mark's sleeping in his purple sweater.
That's why I'm wearing it, nice and cozy down here.
So you kind of have green on both sides.
Yep.
Positive charm. So as time is passing, then dealers have to sell in order to hedge. So they're getting longer and longer.
Right.
Yeah.
So, and same with that upside green. Sorry, Jason. That upside green means they're short calls though. Because they're long stock against it, that call's going down in delta. They have to sell that stock out that they're long against that short call. So it's long put, short call scenario for the dealers today. It looks
that's right. And because of that, this has a strong kind of bearish push on both sides.
Yep.
They are going to be selling. So likely what they're going to try to do is they will try to sell to a point where charm is kind of balanced. Now, dealers also tend to warehouse their risk a little bit during the day. Like they won't be hedging constantly throughout the day. This gives us as traders an opportunity to say, okay, before 1:30 or so, 1 o'clock, 1:30, 2 o'clock,
Yep.
when the dealers start stepping in, I can position for whatever they have to do.
Okay.
So I'm looking at this, and I see that if they sell down to here in this like 43.60,
Let's get the graph. Let's share that screen. I'm not seeing.
Oh, we're not sharing the screen. I'm just on the screen. I'm not even looking at your face.
Oh, okay. We'll get.
I don't want to turn to stone.
There it is. Okay, here we go. This is what I was talking about today.
Mm-hmm.
So my point here is these green bars left and right, and the center is right in that little white space in the middle, I would imagine.
Yeah.
Right?
Mm-hmm.
Okay. I can't see it.
This is where price currently is.
Okay.
Yeah, I can
go ahead.
put it on dark.
Now explain. Yeah, there it is. Okay. Now explain, Ricky, what this means. So yeah, this is what we were referring to with our hands, but now you can see it on the screen. This is good.
Mm-hmm. Yeah. So this is dealers are long puts and short calls essentially,
okay.
And in order to hedge on positive charm, they have to sell. So they are going to want to sell to a point where they are balanced, where charm aggregate, when you add all the bars together, is basically zero. As you go further away from the money, so these will eventually shrink to a point where they're irrelevant. Think of it as orders going down to like 10 cents, 15 cents as a spread. Yeah. So they become irrelevant. These flip as price gets sold down. So you're probably looking at, 43.60, 43.65 right now.
Yep.
Somewhere in between there where these bars will flip, become negative charm, and dealers will stop selling. They're like, okay, we're balanced. Our book is looking good. Yep. So this is about where we'll go. Right now, you're looking at, 43.85. This line right now, I think, is delayed until we sign something with CBOE. But yeah, this line right here is the current price. So you have like a 20-point opportunity. And I mean, if you're looking at the options, you're looking at deltas, you can see this is about, from a Garch distribution, you're looking at 35% success rate calling this kind of move. And, Volland gives you that edge.
So would you, if you were doing an IC here, an Iron Condor, and you were setting this up now, would you lean this short a little bit, do you think?
Yes.
So you pressure the call side, make it closer to at the money, maybe bring the put side down a little bit and get your money that way. That's what it seems like to me. That's how I like to use this.
Right. That's exactly right. You would either push your Condor down, or if you're feeling saucy, you can make like a little bit of a wider fly here in the 43.60 area. Make like, a 10, 15 point wide fly and sell it when you reach your target.
Okay. I like it. Did you hear that saucy? Mark, he said when you feel saucy. I feel saucy a lot.
Well, I thought the sauce you were going to go for was more like a broken wing butterfly, because wouldn't this have a little momentum on the downside that like maybe you actually want that like open-ended, like obviously you're 10 to the target, but like that open-ended downside.
Yeah.
I wasn't going to go saucy. I was going to go broken, I guess.
Yeah, broken's cool. And Jason, that's a good point, Mark. If you did broken wing here, where would you put your short? It's hard for me to see I'm on a little screen. I apologize. But what strikes are those where you'd put the short? Is there a place you'd place that short on the broken wing?
So if I'm doing a broken wing butterfly, like the way I trade plan for that, just personally is I look at what risk am I willing to accept. And for me, either, right now, the downside or the upside, like any kind of bullishness, seems like a low probability. Now, it's early in the day, so you might want to, wait a little bit before, make sure that, option customers are not going to sell their calls or whatever, but or close their call positions.
Yep.
But this like top side area here, I wish I can annotate on StreamYard.
Yeah, I know. I've been. That's the dumbest thing I've ever seen. I can't believe they don't have that tool. But anyway, go ahead.
Yeah, but this area right here is the risk I'm willing to take. So if I'm going to do like a broken wing butterfly, like, which is a good call from Mark, I would want to kind of break the wing so that the the like max loss area is up here, up here around this 4410, area.
Yeah, but that's an
looks
upside.
like it's a strong move.
Right, but that's an upside move. Why would we do that up there with the selling pressure based on this graph? Why wouldn't we do a downside put version of this?
So you're saying you would want to?
It seems like everything's a sell
right
here. Yeah, market makers have to sell this one. I'd even do it so that it's whatever this second big green bar is, somewhere in that range. So no, to the downside.
Right here.
Yeah, in there is where I want to place my short.
Yeah, no, what I'm saying is like,
I think you're saying the same thing. Yeah,
you want to break your wing.
Okay.
And Jason's saying,
so I would put the higher wing right over here.
I gotcha.
And I would put the lower. I would put the max loss wing down here. I'm willing to accept this risk, and I would butterfly it here in this area, make the peak here in the 4360, 4365 area.
Yeah.
And make the taller, the broken wing over here, south of 4360.
43. Okay. And Mark, what were you going to say? Sorry, I think I interrupted you.
Oh, I think I totally agree with that design.
Okay. Yeah, I'll play around with that too. I have to understand what I'm looking at with Volland's and get the kind of the bearishness, bullishness feel of it if there are some. So I do love the broken wing butterfly though. And plus, here's my other thought. This is dumb, right? But I'm gonna say it anyway. We've been up it seems like we've been up for 25 straight days, which I know it's been about 10. So we're gonna probably have a little bit of a pullback, which is natural and normal and healthy. But when you get data like this and it kind of gives you an indication that's a potential for that, I love piling on even more. So we're gonna.
Yeah, it gives you good edge.
Yeah, I like it. Well, that's the whole game, right? Edge is the game. So all right,
nothing's a guarantee. But you just have to trade plan for your edge.
Right. Yeah, and then I think in this environment too, this lower implied volatility, it may not be low enough relative to historical. It may be, who knows yet. We haven't talked about that. But you need to come up with a trade strategy that's beneficial in lower volatility environments, right? And unfortunately, you don't get to sell premium as often because it's low premium, and you should try to avoid that most likely. So we have to come up with more clever strategies. So,
well, the other thing to note that I'll reiterate is that on 0 DTE, you know exactly where implied volatility is going.
Oh,
so it's something to, if you have an edge in direction, that kind of Volland gives you, then you can make the move knowing implied volatility will eventually drop.
Yep.
Although today you got to be careful because I think we have like a Jerome Powell speech or something, a policy roundtable or whatever.
Oh, is he talking today?
Yeah, this afternoon.
Okay.
So you got to be careful with your Condor.
Right. Yeah, I might be doing a broken wing butterfly today.
Yeah.
Stay tuned. All right. Let's roll because we have HVIV to talk about. Maybe we'll tee that up for next week. Is that cool?
That's fine. I mean, we could just mention real quick that HV is above IV, and that's uncommon. It's not like unprecedented, but it's uncommon. It's
Are you talking in spiders
if you want 1 month? If you want to sell 1 month vol, it's a bad sign.
So is that in SPY that you're seeing that, or just generally? What do you?
SPX.
Okay, SPX. Yeah. Okay. Interesting. So they're bashing implied vol pretty heavily, huh?
Yeah. Vol got crunched pretty hard last week.
Yeah. Okay. I always hated that one because I've probably always long premium somewhere. Smushorama. Have a bad weekend. All right, boys. Very good. We'll pick up on HVIV, the comparison next week, if that's okay.
Sounds good.
You guys have a great weekend the rest of the week. Mark, big wine weekend. Just saying.
Oh, I love it.
Yeah. I have a new one for you. We'll talk about after. All right. Well, you guys be good. Have a good weekend, and we will pick this up.
Happy trading, everyone.
Happy trading.
Happy trading.